Hello, and welcome to the Business Academy. Today we'll be discussing more complex features and functions within business accounting. These features include setting up progress invoicing, financial reporting, reconciliations, and an overview of online banking within business. With that, I'd like to first discuss progress invoicing. Progress invoicing is a way to incrementally invoice customers based on a set timeline. This timeline in which the invoices are sent out is both customizable and reactive to the order's date ranges. Within business, there's a lot to know about progress invoicing, but I'd like to start off by demonstrating how to view and set up invoicing schedules. To set up and view these invoicing schedules, we'll first go to the Company tab and Settings. Here we have a lot of features, but if we click on Accounting and AR, we'll see our accounts receivable settings. Now if I go to Sales Orders, you'll see that Progress Invoicing Schedules appears below. We can also search in the settings for this as well. If I type in Progress, you can see Progress Invoicing Schedules defaults down below, and it's in green. If I click on Progress Invoicing Schedules, we'll be able to view any setup Progress Invoicing Schedules, as well as search for active and inactive schedules, and we can also add or delete schedules. For our purposes today, I'll add a new schedule. So here we'll be able to name our schedule. And we'll also be able to set up our timeline and what the timeline is based on. This is either the order date, which is the date the order was created, as well as the approval date, which is when the order was approved by the customer or approved internally. For our purposes today, I'll choose the order approval date. By clicking Proceed, we'll be able to start configuring our timeline. Now you may see this red warning that appears. This notes that the price ranges that are set up do not equal to 100%. The price ranges we can set up by clicking Add Price Range. I'll do that now and show you what this looks like. So we click Add Price Range. This is where we can add ranges of price. If you want to add a more base range, you can simply add a number that it starts from. And if you want to set an end date, you simply uncheck this box and then click your end range here. So this price range will go from $300 all the way up to $30,000. Now, because I already have an invoicing price range set up at $0 and has no end range, this will warn me that the price range cannot be set up because it overlaps with the previously added price range. By clicking Close, if we want to edit the previously added price range, we can click the little pen and pad icon. So this is the previously added price range, and it's the $0 with no end range. Now if I want to set up my schedule, I can click No Schedule Setup, click here to add new one. This will populate a pop-up screen in which we can choose our detail type as well as our payment terms. Now it is important to note the payment terms are for each individual step. Each individual step is essentially its own invoice. So that is important to note. So if I choose my detail type, we have three options here. We have on approval, percentage of timeline, and on completion. I'm going to choose on approval. This means that when the order is approved, this partial invoice will be sent to the customer. Now I'll choose my payment terms for the approval invoice. Now we have our item types. Now item types each have different percentages, and the percentages are based on the timeline of the overall invoice. So let's say I want this to be incremented in 25% of my timeline. Each item type will have 25%. By clicking 25, we'll be able to note that 25% of the total cost of these item types will be added to the invoice for the approval. Now, the only two that don't have 25% are the inventory and manufactured items. This is because you cannot bill for a percentage of the inventory or manufactured, it's either going to be 0% or 100%. Now, when you choose to add the 0 or 100 is completely up to you. I'm going to choose to add those at the end. So each step will have 0% of inventory and manufactured, and my final step is going to have 100%. And I'll show you what that looks like as I build my invoicing schedule. So now that I have 25% of my timeline built out per item type, I'm going to save. Now you'll see I have one step of my progress invoicing schedule laid out, and this is its own individual invoice, and 25% of all these line items will be billed out for this invoice. I can also add a threshold here, and a threshold is essentially a new step. So that is also important to note. As you add more steps, you'll click this little plus button, and the same pop-up will appear as we had before. So I had on approval. Now, if I'm going to do that 25% range all the way up to 100%, I'm going to do percentage of timeline. I'll click my payment terms. And now I'm going to do percent of timeline. Now, the previous one was on approval, so that was 25%. This is going to be 50% of the timeline. Now, because it's 50%, the accrual is going to be 50%, but that means that this also has to be 25%. Again, I'll skip my inventory and manufactured. And because I'm going to wait until the end to bill 100%, these are still both going to be 0%. So if I click save, now I'll be able to see that we are adding up to 50% of the timeline. I'll add another threshold. I'll do percent of timeline again. However, this time it's going to be 75%. And again, I'll do my 25%. And for the manufactured and inventory, it's going to remain at 0%. If I click save, again, please note that all the 25s add up to 75 per each item type. Now I'll add my final step. Now, instead of doing percent of timeline, I'm going to do percent on completion. This means when the order is marked complete, the final invoice will be sent out to the customer. And for this, I'm going to choose a different payment term since 100% of the manufactured and inventory are going to be sent out at that time. I'll choose net 45. Now we'll do our final 25%. And 100 for inventory and manufactured. Now if I click save, you'll notice each step is in black instead of red, and each step adds up to 100% per item type. My payment terms are noted here for each individual step, and please remember that each step is an invoice. If you want to edit any of these, simply click the pen and pad, and that same pop-up will appear. Now, other than inventory and manufactured, there is one other item type that I'd like to discuss on the threshold screen, and that is the item group. Item groups are groups of items, and these items could be different item types. So within one item group, you may have an inventory item, a service item, a non-inventory item, and a discount item all within one group. Now with an item group, it's important to note that each item consisted in the item group will pull in each percentage. So if the item group is 25% here, 100% of the inventory item will be associated with the item group. 25% of the discount item will be added to the item group. 25% of the non-inventory item will be added to the item group. So just because the item group is labeled at 25%, the individual items within that item group that make up the total line item will take from the percentage based on the invoicing schedule. So now I have my progress invoicing schedule. I can click close, And now you can see I have my progress invoicing schedule here. Now, if this was incomplete, let's say we deleted this, and if I click close, you'll see that now it's in red, and I have a warning that my columns do not add up to 100%. Now to troubleshoot that, we're going to do exactly what we did before. We're going to add that same threshold we had. So in case you ever see that warning and the red font, that just means that something is not configured to 100% of its capabilities. So now we're all good to go again. Click close, and now it's in blue. So again, if you ever see the red font on the invoicing schedule, that just means that your timeline is not added up to 100%, and you may need to look at your item types and your percentage of the timeline. Now with the percentage of the timeline, that's completely customizable. You can go 10%, so you would have 10 separate steps, 8 at 10%, and then 1 on approval and 1 on completion. You could go just 2, 1 on completion, 1 on approval. It's totally and completely up to you and how you want to invoice incrementally for your customers. So now that we have our progress invoicing schedule set up, now I'd like to show you how to add that invoicing schedule to the sales order and what it looks like. Now to add a progress invoicing on a sales order, incrementally bill your customer, we need to make sure that the sales order type allows this. So to make sure that a sales order type allows this, I'm going to show how to create a new sales order and add the progress invoicing schedule that we just added onto the sales order type. So to do this, I don't have to go anywhere within our settings. We just have sales order types right here, and I'll click on that. Again, if you do want to search within the settings to find something easier, you can simply type in what you want to find, and anything that matches will come up in green, and you can click that. Now, if I want to add a new sales order type, I'll just click the Add button. And here we have a lot of options to completely customize our sales order type to fit our needs. I'm going to name this as a progress invoicing sales order type. I can make this default if I want, which means every time I add a new sales order, it's going to default to this order type. So if you do progress invoicing a lot, you can choose this to always have this sales order type come up. You can select our payment terms. Now again, since we are doing progress invoicing, the progress invoicing settles payment terms per step will override this payment term. Our invoicing format, this is the printable format for the invoice. And our order creation status. So this means when the order is created, what status do we want this to go into? Since I have approval as my progress invoicing first step, I'm going to choose quoted rather than approved because I don't want to send out an invoice as soon as I create the order. So as we create the order, it'll go into a quoted status, and then we can add our line items and customize it before we're ready to send it to the customer for approval, or we approve it internally. These are display fields for the order. So here I can choose to show my order name, my target date. I can make the target date required. I can show the customer contact as well as the project. Now, if we don't want to show any of these things, we can uncheck these boxes and those display fields will not be shown on the order. Now, by clicking Show Advanced Features, we'll have some more options available to us. Now, you'll note that progress invoicing is not yet available here. Now, if we click Turn on Contract Management, we'll have even more options. And you'll notice that we have the When to Invoice field. And by default, this is Choose. But if we want to change that to the progress invoicing schedule that we previously set up, we can click Choose. And here we have Invoice on Approval, Invoice on Completion, Manual Invoicing, but here we have Progress Invoicing. If we click Progress Invoicing, we'll be able to select our schedule. So here we can select the invoicing schedule that we previously set up, which is progress invoicing. We can also choose our terms and conditions, but I'm going to leave that blank for right now since it's not required. Now here is our approval methods. We can choose to have internal approval required, and we can also choose our approval methods for the customer. Electronic is going to allow the customer to sign a little box on the portal or within their email so that they can approve the order electronically and capture their signature. Or we can choose written so they can upload an attachment of a written document or verbal approval. We can also configure these by clicking the configure hyperlink. And we can choose things like require attachment. And for the electronic, we can choose to require a PO number, require e-sign, or pre-fill contact info for e-sign. So again, this is customizable for your business needs and can be set up on the sales order type simply by clicking on Turn on Contract Manage after you show advanced features. So again, to do this, we'll show advanced features, we'll turn on contract management, we'll choose when to invoice and change it to progress invoicing. We'll choose our progress invoicing schedule. And then we have our approval methods here. I'm going to choose verbal for right now. Now I can save and close. And you'll note that now we have that sales order type available. Now I'd like to show you what this progress invoicing looks like on a sales order. So for that, I'm going to go to the Quick Add button and create a sales order. Now to have that progress invoicing appear available to us, we have to choose that sales order type that we just created. To do that, I'll click the simple order and choose progress invoicing sales order from the dropdown. You'll notice that now we have our progress invoicing defaulted as the invoicing, as well as the invoicing format we just set up on the sales order type. Here's our target date. So this is when the order will be due. We can also set a duration as well. So if you want to do 4 months and 3 weeks, now we have a projected target date. Now we'll choose our customer. Bill to and ship to automatically appears. And we can name our order as well. Now we set up our schedule based on the item types. Adding line items will dictate what percentage of each item type will be taken for each invoice. So here I can choose an inventory item. I can choose a service item. So I'll add some labor. That's our service. I can add a manufactured item. And now when you have an inventory item, you'll select the location that it comes from. So here I'll take from the showroom since we have 4 on hand. And for the complete electrical part, I'll take from the showroom as well since we have 18 available and 19 on hand. Then I can change my prices. And my quantities. So now that I have my line items set up, I can either choose to not tax these items, in which you'll note that the tax has adjusted to $0. As I click off items, you'll see the taxes change. Now the GL categories we have set up, we can add these here for each item to dictate where this labor, this electrical part, and this iPad is captured on our financial statements and on our chart of accounts. We can also do that here on the default category. If all these are going to be electrical income, we can dictate that here as well. By clicking Create Order, you'll note that this goes into another screen for the approval method. Now, since I had a verbal approval, I'll just click Approve. If this was electronic, we'll be able to send the contact and email with their approval method. So now if I go into the progress invoicing order, you'll see that this is changed to approved, and it also says partially invoiced. This means that first step of the invoice, that 25% has been set out. To view the progress invoicing, we now have progress invoicing here within the invoicing section. If I click on that hyperlink, a pop-up will appear showing me how much in terms of dollars has been sent out and what will be sent out per the order and the line items on the order. So here you'll note 25% of the service has been sent out, and the manufactured and inventory that we have on hand is going to wait until on completion, and those will be sent out as well. If you want to invoice before the timeline, we can just click this little invoice, and the invoice will be sent out to the customer. So that will override the timeline and send it out. We can also edit by clicking the edit button. We can either remove a step or we can adjust a step. By clicking close, we can go back to the invoicing schedule, and we can also close that. So that's a quick little demonstration on how to set up progress invoicing, how to configure the timeline per item types, how to add progress invoicing to a sales order type, and then how to use the progress invoicing on a sales order. So now that we've gone through progress invoicing, I'd like to jump into something that's very important for any company, and that is financial reporting. So now that we have our GL accounts added, we've created multiple transactions, we have some inventory and items set up, and we've also added some sales taxes and billed for those sales taxes. I'd like to now explore some financial reporting found within business that will help report on those totals as well as your financial status of your business. To view these financial reports, as well as any reports in terms of business, we can click reports, and we have a lot of reports that we can view within this dropdown. Now the accounting, all of them drop down here, as well as the report builder, which we'll explore in just a little bit. Now the first reports I'd like to jump into are two reports, as well as exploring the differences between them, as they are fairly similar. And these are the balance sheet and the trial balance. So first, I'd like to jump into the balance sheet. This is arguably the most common report of any business and a very important one to show how your business is running and your financial status. So on a balance sheet, your GL accounts appear with the totals as of a certain date. And within the balance sheet, you can change that date by clicking the little calendar icon and choosing a new date. By clicking search, that date will change and update your GL account totals. Now the balance sheet is separated by total assets and total liabilities. Assets are things like your bank accounts, your accounts receivable, and your asset accounts. Your liabilities are things like your liability accounts, your accounts payable, your credit card accounts, and your equity accounts. And you'll note that the total equities fall down at the very bottom of the liabilities section, and the total assets fall down at the bottom of the assets section. The goal of the balance sheet is that the total assets and the total liabilities equal out, which you can see here. We have a total assets of $29,139 and a total liabilities of $29,139. So these equal out. If they did not equal, every time you viewed the balance sheet, there would be a red warning saying that your accounts do not equal out. Now we can change the report basis as well. So this is accrual. If we want to change it to cash, we'll just choose the radio button for cash. We can click search to change that. Now another important feature with the balance sheet is the export feature. Now to find this and export the report, we'll click on this little gray arrow. And here we have a couple features as well. Now obviously I mentioned the export feature. We do have the export to Excel and the export to PDF. These will export the report in their corresponding formats. Now we also have save this search and manage saved searches. So if this is a search you're going to run again and again, you can actually save the search and name it. So if I want to always show this, let's say this is a yearly report that we always want to see what we did on, the first of the year or the last of the year, we can actually save the search and then load those searches. So if I want to auto load search results as I load the saved search, I can choose that. If you don't have this loaded, every time you choose to save search, you will have to click the search button on the right. So I will choose auto load search results. Default means that every time you choose the balance sheet, this saved search will load automatically. By clicking save, we'll be able to save the saved search. And now if I click the gray arrow, we have the saved search listed below. Now if I view the trial balance, this also shows totals of GL accounts. However, they're separated by debits and credits. So this is a difference that's very important to note. The trial balance is separated in total debits and total credits. Now, just like the balance sheet, the goal of the trial balance is to equal out both different divisions. So instead of the total assets equaling out to the total liabilities, the goal of the trial balance is that the total debits equal out to the total credits. Now, if I scroll down, you'll see that the debits equal out to $31,414 and the total credits equal out to that same amount. The trial balance is also a neat way to reconcile your balance sheet. So if the total debits and total credits don't equal out to the same amount, chances are your balance sheet is not going to equal out to the same amount. And you can see a little bit more detail in terms of what's not equaling out on your trial balance. I have some search filters here, so we can actually search per category. We can also choose not to suppress accounts with no activity. So right now, some accounts are being hidden simply because they have no details within them. But if I choose to show them, click search, you'll see now I have some accounts that have no totals within them. That's because I've chosen not to suppress them within the report. You'll also note that some of my totals have been divided. This is because I've chosen to only show certain GL categories. If I choose all, this will now bring up the total amount for each account. If I do want to suppress those and hide accounts with no details within them, I'll just choose that suppress again and click search. There are also date periods. So if you want to see the next 30 days or this year, this week, you can choose a date period to run this report. And the date ranges will automatically adjust based on that date period. So again, just to recap, the balance sheet is a list of accounts that are oriented between assets and liabilities, and the goal is for the total assets to equal out to the total liabilities. The trial balance is a report that shows total GL account balances, but they're separated between debits and credits, and the goal is for the debits to equal the amount of credits. So now that we've explored the balance sheet and the trial balance, now I'd like to jump into our profit and loss reports. Again, to view this, we'll go to reports, and we actually have 3 profit and loss reports that we can run. We have the profit and loss. So if I run that, we'll be able to see the total gross profit and the net income for our business. We can show percentage of income, and we can also show percentage of expense. If I click search, we'll have 2 new columns that are added to the report. 1 percentage of income and 1 percentage of expense. Now if I want to show columns for the week, I can do that as well. And this will actually factor in different weeks that make up the entire period. So now I've done weeks in this month, so each column is a different week within the month. And also the percent of income and expense are divided in between each week. So with this report, this profit and loss report, you have a lot more details to factor in to what you report on, and you can get highly detailed based on your needs. And just like the balance sheet, we have the export to Excel and PDF. And I'd also like to note this is available with all of our reports in accounting, income, purchasing, sales orders, and even our report builder. So any reports you can run within business, you can export as well. Now, if we want to show those categories again, we can simply choose the category and only see totals within that GL category. We can change our report basis. So if you want to run for cash totals versus accrual, we can do that by clicking the radio buttons and choosing search. The other profit and loss reports are profit and loss by category. This is profit and loss by GL category, and you'll notice that our GL categories are different columns within the profit and loss report. We still have our payment periods, so our date periods can be this year to date, last week to date, and so forth. And again, by choosing these, the date ranges will automatically adjust. And we also have our report basis, which is cash and accrual, which you can again use the radio buttons. And just to show again, we do have the export feature. The profit and loss comparison report is a little different. So this is a profit and loss report, but you're going to add a comparison report. So if I click add report, I'll be able to name this report. I'm going to choose to compare to a budget. I can select my date, my time period, and then I can add my comparison. Now for the comparison, we'll choose our comparison type. So this will either be the previous period, or we can choose a budget and forecast. So if I choose a budget report, since I've already built a budget for 2018, I can compare our profit and loss to that budget report. I can also include percentage difference and dollar difference. I'll enable both of those so you can see what that looks like on the report. If I save comparison, we now have the comparison noted here, and we can either delete the comparison, and we can also edit the comparison by clicking on the name of that report. If I click save and run, we'll be able to see what this report looks like. And here you'll note the total for the budget for 2018, the year to date on our profit and loss, as well as our percent difference and dollar difference. And here we also have the export to Excel option listed in the blue button. Two other reports I'd like to demonstrate to you today are AR aging and AP aging. AR aging shows how much customers owe you depending on the payment terms each transaction is owed per customer. Now we can view transactions by clicking on the blue hyperlinks. This will show that there's one invoice and the total, as well as how much it's past due. And if we click the current, we'll be able to see nearly the same thing, but it shows all of them instead of just one payment term. We can also click the customer name, and this will bring us to the customer dashboard to see more information. We have more search filters here, so we can choose categories. And we can also choose intervals and bucket days, as well as a date as of, using the calendar function. And here with the gray icon, here's the export feature. The AP aging functions much of the same. So if you click search, we don't have any information for the vendor, but essentially this functions much like it does the AR aging, except this is a report of what you owe vendors as opposed to what customers owe you. So the totals and the payment terms are what you owe rather than what customers owe you on the AR aging. But the hyperlinks and the basic functionality are all the same. Now, I did allude earlier to the report builder, and I'd like to show you how to build custom reports based on transactions. So if I click the report builder, I can add a new report, And here I can choose my data sets. So if I want to run a report on transactions, I can do that here, and I can actually name the report. I can add it to the menu if I want, and then choose where this is located in the menu. So now this is important to note that these top tabs are actually the tabs that you see up here. So if I add it to accounting, it's going to add it to the accounting dropdown. If I add it to company, it's going to add it to the company dropdown. If you want to find the reports dropdown, you simply scroll down and you'll see reports. And these are the different sections within the reporting dropdown. So if I want to add that to the accounting section of the reports dropdown, which is located here, I can choose accounting underneath reports. By clicking next, we'll be able to build our custom report. On the left, we have available columns. This is data within business. And by adding columns, you'll be able to show data that fits that criteria. So if I want to show the transaction type, the transaction number, what customer and vendor this is related to, I can show the total amount, the sales tax, transaction date. I can get either very broad or very detailed based on these available columns and what you want to show on the report. And there's also filtering available. So if I choose to add a filter, I can actually choose how to narrow down my results. So if I want to show my amount and I want to say that it's greater or equal to $0, I can do that here. I can also add a filter by clicking Add Filter. Now it's also important to note that this defaults as AND, but we can also do an OR. And that means that the other filter will be the amount or the transaction date is equal to. And you can also change that by clicking the drop down here and then choosing whether it's equal to, not equal to, based on what you choose here, just like we did up top. Now to delete these filters, you simply click the X button. We can change our OR back to AND. We can click Submit. We also have sorting, so we can sort by whatever we have as an available column. So I'm going to choose to sort by the number. And we can also rearrange by dragging and dropping these columns. We can also group. So this is going to group things related to each other. So I'm going to group the customer vendor, sort the transaction date, and then we have our aggregate configuration. Now I'm going to choose to aggregate by total amount. And when you choose to aggregate something, we have options here. So sum is going to add it up. Average is going to take the average of all the totals in the grouping. And if you don't have grouping, it's going to take the averages of the total report. We also have the min and the max. I'm going to choose sum, so it adds up a total amount per group, which is the customer, vendor, or employee name. By running the report, we'll be able to run our custom report. So here we have the total amounts, and here's that grouping, which is the customer, vendor. We also have the transaction type, the transaction date, the transaction number, and we have the total amount as the aggregate sum. And as we scroll down, we'll see our grouping is by customer and vendor. If you want to configure the report on the report screen, we can choose this little page and gear to go back to the previous screen we were just on. There's also an export feature. So if I click the CSV icon here, we'll be able to export to a spreadsheet. We also have a refresh button, and we also have a filter option. So here, this will populate the pop-up for filters, and we can filter right on the report screen. Now, another thing I quickly wanted to jump into are bank reconciliations and credit card reconciliations. Now, to view this, we're going to go to Accounting and Reconciliations underneath Banking. Here, we can choose our GL account. So I'm going to choose a bank account, and we can click Search to view previously reconciled or pending reconciliations. Now, to add a new reconciliation, we'll just click the blue Reconcile button. Now we'll be able to choose our GL account. So again, since we're reconciling, I can choose my bank account or my credit card account. I'm going to go ahead and choose my bank account. We'll choose the statement date. This is the date in which the statement ends. So I'll choose today. And then our beginning balance. We can choose our ending balance. So the ending balance is going to be what's on your statement that you receive from the bank or credit card. So in this case, I'm going to enter 16,000, and I'll show you what the reconciliation screen looks like, as well as how to troubleshoot. So now that we have our reconciliation info filled out here, I can click Next. And we'll be greeted with all the deposits, checks, and payments that we've issued over the period that we've entered. Now to include checks, payments, and deposits on the reconciliation, we can either check off individual transactions, or we can choose the All option as well. Now you'll see that the difference is $250, which means that our reconciliation is off. Now, as you look at your statements that you have on hand and what is in business in the deposits and checks and payments, you can troubleshoot in terms of either adjusting an amount, possibly there's a duplicate entry, you'd have to void one and include the other. Maybe you'd have to void one altogether if it's the wrong amount, or editing the total, or maybe including a transaction that isn't currently there. That is completely based on your reference of the statement that you have on hand. And again, that is whether you're reconciling your bank or credit card, and the statements would be according to those as well. Now, since this is in red, I cannot reconcile. If I try to, it'll tell me that it is off balance. What I can do is save and resume later. And this will allow you to go make the changes that are necessary to make this account go into balance. And you'll notice that this is pending, which means that it's not yet reconciled. Now, if I want to go in and edit that reconciliation again after I've troubleshooted, I can simply click the blue icon, the blue hyperlink, and I can also adjust this. So by entering our new ending balance, now that we've included everything, you'll see that the difference equals out to 0. By clicking reconcile, we'll be able to reconcile that account, and a reconciliation summary appears as a pop-up, and we can view the summary, which shows the date was reconciled, who did the reconciliation, the beginning balance, the cleared transactions, as well as the total. We can undo the reconciliation by clicking the blue hyperlink for undo. We can also view details. So this will show the transactions that make up the reconciliation, as well as the amounts, the name of the customer vendor that's attached to each reconciliation, as well as the transaction number, the date, and the type of transaction. By clicking close, we'll then go back to the reconcile screen. We can click close again, and now you'll see the status has changed to reconciled, and we have the ending balance and the beginning balance listed in front of us. Now, if we go to reconcile again and choose our GL account, you'll note the beginning balance adjusts to the ending balance of the previous reconciled account. So now, instead of $25,000 or 0, it's now $16,250. And then our ending balance we can choose on the next statement that we receive from the bank. Now, very quickly, I did want to go over another thing, which is enabling online banking. So to enable online banking, we can go to Company and Settings. And by clicking Integrations, you'll see online banking here. Now, again, I would like to point out that if you do want to find something very quickly within the settings, you can actually start typing up here, and whatever you want to find will be highlighted in green. Now, if you want to enable online banking, you can simply check off this box, enter your email address, followed by your first and last name, and click clicking Save, you'll be able to save that information on the online banking. Now, when you're on the online banking screen, you can add the accounts. You can also choose to turn off online banking, as well as edit the user information, which is the email, first name, last name that we just entered. It's also listed below here. If you want to add accounts, we can click the green Add Accounts button. And here we can search for the bank, the credit card company that we want to find and add to our online banking. So for instance, if I wanted to find PNC Bank, and click PNC, then we can choose PNC Bank. Now here, we'll have to enter our user ID, our PIN number or password, and then re-enter our PIN number and password. Now for our purposes here, we're just going to enter 3 zeros, and you'll see the next button appears down below. Now as you choose the correct information that applies to your account, you'll click Next, and you'll be able to start using our online banking feature, and all your transactions from your bank or credit card account will filter into business. So that was a demonstration of our complex accounting, which included online banking, reconciliations, financial reporting, and progress invoicing. Thank you for attending our Business Academy Accounting 401 session, Complex Accounting. I hope you learned some things that you can apply in your business system, and I look forward to seeing you next time. Have a good day.